Hi, everyone. Just to give a minute or two for everyone to get in the room, just clicking over to 1 o'clock. Welcome to this special edition of Mediation Matters, September 13th. It's my pleasure to have Kate Phillips from Home Equity Bank here with us. We are going to talk about reverse mortgages. Before I do that, I would like to give a brief land acknowledgement to acknowledge the land that I'm standing on today as the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We deeply recognize and appreciate their historic connections to this place. As a settler, I'm very grateful for the opportunity to meet here and very thankful to the generations of people who have taken care of this land for thousands of years. So thank you so much for that. And I just want to give Kate a proper introduction. So Kate and I met just a few months ago, I think, and we're talking about the concept of the CHIP reverse mortgage. And I had seen ads on TV, and such an interesting concept because a couple of my clients used this, and I didn't know enough about it. And so when an introduction was made to me by another member, I was jumped at the chance to meet Kate. Kate has been with Home Equity Bank since March 2023, and she was a business development manager for over 30 years in real estate services and in the investment industry. Kate supports and educates financial advisors and now family mediators on the opportunities the CHIP reverse mortgage can provide to their 55 or better year-old clients. So without further ado, welcome, Kate. We'll do a questions and answers at the end, and look forward to the presentation very much. Thank you.
Thanks, Marianne. Lovely to be here with all of you. Looking forward to sharing with you really all about the CHIP reverse mortgage product and a little bit about Home Equity Bank as well. I also would like to thank my friend Andrea Watt, who was kind enough to make the introduction to Marianne, and we've had some good chats about this product, and I really hope that you'll find some just feeling more comfortable talking about this topic with your clients. But of course, I'm here to help support you every step of the way. So as Marianne alluded to, this product is for the 55 and better, as we say, demographic. And I'm going to get right into some of the details about the product now. So to start off with, as promised, I want to talk about who Home Equity Bank is, where we have been, and where we are today. So Home Equity Bank has a 37-year track record. As Marianne mentioned, we have the brand, which is called CHIP Reverse Mortgage, or CHIP is our brand. The bank itself is called Home Equity Bank. So we are governed just like all the other Schedule I banks. We have been a Schedule I bank since 2009. So we are governed just like all the others. We are the same. And we're really proud of that fact. And we are a leader in reverse mortgages. Sometimes I say this is all we do, and it sounds sort of negative, but that is meant to really illustrate that we are the experts and the pioneers in this market. So we have just exceeded in 2022 $6 billion in reverse mortgages. We're about to surpass another 1 billion in assets, or excuse me, in reverse mortgages this year, coming up, like finishing this quarter. So we're pretty excited about that. We have also been recognized by the Globe and Mail as being ranked Canada's top growing company for the third time in a row. And what's really exciting and not that well known is that we were purchased by Ontario Teachers Pension Plan in July of 2022. I know the end clients that I've spoken to about this product are just so excited. Their eyes light up when they find that out. So that I think just dispels, the conviction that Ontario Teachers Pension Plan really have a big interest in Home Equity Bank. And they also are helping us, providing us with some of their resources so that we can continue to grow and perhaps even develop more, exciting, not new products, but, enhancements to our already existing great product lineup. We're also affiliated and endorsed by CARP, which is the Canadian Association of Retired People, and the Legions. I want to mention about the Wealth logo in the bottom right-hand corner. As Marianne mentioned in the bio, is I am a business development manager on a team which we refer to as the wealth team. So we and my colleagues are in Ontario, well, we're across the country actually, but in Ontario, focused on financial planners. And now, as Marianne said, I can work with, I'm looking forward to working with family mediators. So that's just what that's about, because as you can probably appreciate and understand, is there's a lot of involvement with reverse mortgages in the banks, with mortgage brokers. I know some of you know mortgage brokers. They're very much aware of our product and they use our product almost exclusively. But financial advisors and others may not know about our product as much as they could. So we have a special team that is focused on that division. So just a little explanation about that. A lot of accolades from the media. As again, Marianne referenced, and I know a lot of you have seen the ads on TV featuring Kurt Browning. He is our ambassador, talking about reverse mortgages and targeting the end consumer. So having said that, though, we have a lot of accolades and we're getting a lot of attention from the likes of Rob Carrick, who writes for the Globe and Mail. He recently wrote a great article about reverse mortgages and, not forgetting that that is a very viable option in today's marketplace. So the Globe and Mail, the financial planning magazines, Canadian Mortgage Broker, we're getting a lot of accolades through those avenues. And I love this one too, which is available on our website. If any of you are curious, our website is chipadvisor.ca that you can reference. And Peter Mansbridge is interviewing our president and CEO, Steve Ranson, and asks very point blank, very common questions that I get every day about who we are and what the reverse mortgage product is all about. So that is really entertaining because Peter can be very, very blunt and has some very good questions that he asks our CEO. So I'd like to talk about some of the stats that are out there with respect to this demographic. So this is a survey we did through Ipsen, and what it reveals is that 93% of Canadians 55 and better prefer to age in place. They want to stay in their current home. They don't want to move into long-term care or retirement residence for that matter. And certainly the pandemic really accentuated that. I'm sure you have your, friends and relatives who maybe or parents that have said to you, I don't want to leave my house for as long as I can. I want to stay in my house. So this survey results have really indicated that that is the case. But some other stats that I've come across are that Canadians are getting older and living a lot longer than they used to. So by 2030, 1/4 of Canada's population will be age 65 and older, and 25% of today's 65-year-olds can expect to live past 90. So we've got longevity here, and we've got the interest in staying in one's home for longer than we used to. And 2/3 of Canadians not yet retired say they worry about running out of money during retirement. And then another stat, which is very interesting, is that clients don't realize that they can access the equity in their home. This stat is very compelling, is that clients have equity in their home and they're running out of cash. So they're home rich and cash light is how we like to say it. So the less they have to tap into their investment portfolios also to make ends meet is also, not as attractive as perhaps this reverse mortgage idea. So I'll talk a little bit about the features and benefits, actually a lot about them, because there are some myths out there, some misconceptions. And oftentimes after I do presentations like this, the comment is made that I did not know that. So we're going to start at the bottom left-hand corner, where it states that clients can access up to 55% of the value of their home in cash. The up to words are very important. Not everybody gets access to 55% of the value of their home. It does depend on the age of the individuals, the homeowners. It does depend on where their property is. We need to know their postal code. It depends on the type of property, and it depends on their gender and also the value of their home. So I'll give you an example of, let's say, a 55-year-old female with a home in Toronto worth $1 million, has no mortgage on the home, which, by the way, does not have to be the case. So I said that Toronto 55-year-old female, $1 million home would have access to about 37% of the value in the home in cash. So that's a 55-year-old. A 75-year-old would have access to about 55% of the value of their home. So when we have a calculator, and by the way, which I'll share with all of you, is at the chipadvisor.ca site, which you would put in that information, 4 or 5 pieces of information, and it will illustrate what the client could be eligible for, because of course we need to do an appraisal to verify the value of the home. But you can get an idea by using that illustrator to see what the possibilities are. And that will indicate that up to 55% of value of the home that they have access to. The other fact is that there's no need to sell. We are not forcing the client to sell their property at any point in time. We are not on title. Home Equity Bank does not take a position on title. The client still remains the homeowners and the title owners. But what does need to happen is that we need to pay out any existing secured debts. So if there is a mortgage still in place, maybe a home equity line of credit or any other kind of secured debt, we do need to pay those out first. Then the remainder would be provided to the client in cash. So we would be in first position is what that's known as. Home Equity Bank is the first position mortgage holder, but we are not on title and we do not own the home. The other one that is beautiful is that there are no payments required. This is a reverse mortgage. So when does this mortgage get paid back? When the home is sold. So in the meantime, while this reverse mortgage is in place, there are no monthly payment requirements. There are no payments period required. So that is what clients really love to hear. Right now they may have payments, and again, we're paying out those secured debts, but they're excited to know that we're going to pay out those debts, so they no longer have those monthly payments. So we are freeing up monthly cash flow as well. The other one on the right-hand side is that the client still continues to benefit from home appreciation, right? Because we're not owning the home. Nothing's happening with that home in terms of its ownership, or there's no depletion of the equity in the home. That happens at the end of the time that the client is in their home. So what we do with our illustrator, as you will see when you try it out, is we will ask you to put in an assumption, or we help you do that. Is let's suppose the house appreciates at 3% a year. You can make it 5, you can make it 2, but we will put that in the equation, which is really important for all parties to see. Is that in 5 years, 10 years, what would the value of the home be, assuming that? And that way, it is a visual illustration as to what that looks like on top of what the mortgage has amounted to and the interest on that mortgage. So we can't forget that the client still will benefit from the home appreciation. And that's always important to children as well of these individuals that are doing this. Then the other really great benefit too is that tax-free cash aspect. So this is a loan. This is not being added to T4 income of any sort. And what it doesn't do is eat away at OAS or CPP payments. So there's no clawback as a result of doing this reverse mortgage. So keep that in mind. This is tax-free cash. The other great thing is that there really is no qualification or requalification. So with conventional products, these days, a 65 or 70-year-old, excuse me, or older individual who is going into the bank to get a home equity line of credit or an increase in their conventional product may not and probably won't qualify for those conventional products. With ours, there is no qualification. All there is what I mentioned earlier about their home value, their age, where the property is. That's how they qualify, is with the equity in their home. So that is a breath of fresh air too, because like I said, going into a bank these days who use our product, a lot because they don't have one, is they're not going to be qualifying. And that can be really distressing for the clients. And can upset them. And of course, this is a viable option for those clients who don't have to worry about that situation. So there's no qualification and no requalification. And we'll talk about our product lineup in a second, or the versions of our product that are available. And I will allude to that comment as well about requalifying. So here we are. So these are the crafted solutions that we have today that are available to your clients. Some of these may not apply in a divorce situation. I'm just wanting to let you know what is available because some of you may have non-divorcing clients or friends or family that may benefit from this product too. So if we look at the top left-hand corner, the CHIP reverse mortgage product, which is our flagship product that has been around for 37 years, is really providing that tax-free lump sum option with potential future ad hoc payments. So this is where I wanted to mention that ad hoc payment. So let's suppose the client, you walk them through, or I walk them through the illustrator, and it's determined that they are probably eligible for pre-appraisal, let's say $500,000 in a reverse mortgage. They may say, I just need 100,000, I just need 50,000, or I want to take it all. So they can do all of those, all of the above. But let's suppose they just take that $100,000 because that's all they feel they need today. And later on, they wish to access the remainder or at least another amount. They have 500,000. They just need another 50, perhaps in a year or two, or in 10 years. They're already approved for that amount. So it's like a line of credit. They just call us and say, I'd like another payment, please. So that's what that product is all about. Just think of it as that lump sum payment, or sorry, a lump sum amount that they're eligible for. So that is our most common option. I think 72% of our reverse mortgages come in this form. If we go down below that one, which is CHIP Max, that just means that in certain areas and between the ages of 55 and 75 only, the client may be eligible for more than that amount that we just discussed. And it's because of where their property is located and because of their age. So in Toronto, in Oakville, in Burlington, in London, Ontario, Vancouver, BC, Montreal, Quebec, and I'm just giving you some examples, in major urban centers, this would be the case. So how would you know if they're eligible or not? When you use our illustrator, it will give you a range of amounts. So it might say 500,000 to 580. And that's why. It means they're eligible for this product, which would take them to an amount of 580. The other option is Income Advantage. This is where the client may decide that with your help and with the advice of a financial advisor is that they just need an income boost. Their CPP and OAS and private pension are just not cutting it. And they'd like to live live it up a little bit. So they want, let's say, $1,000 a month, which is our minimum. They may like to take a lump sum initial payment, and that's totally fine. And then $1,000 a month, $1,200 a month, or a quarterly amount. And they can make changes to that throughout the life of this mortgage. So that's a nice option for the client to choose. And then the other one is really a bridging opportunity. So a shorter term solution where the client would not be able to make any prepayments, which by the way, they can do with the other products or the other versions of the product, which we can talk about at a later date or later on. But there's no prepayment options because this is such a short-term product. The client may be just using the funds to renovate their current home to sell it soon. So there you go. Those are the options. Combinations of the various options are available. And really what we do at Home Equity Bank is make sure that the client is offered the right option for their needs. And I will allude to the fact that there are different interest rates associated with each of these products, or could be, as well as setup costs and things like that. So each product is treated quite differently, but we talk about that too as we get through the process. So what are some of the common financial planning uses of these funds? So supplementing income, I just talked about that with our Income Advantage product. And what's really nice is that clients, I alluded to this earlier, you really don't want to touch their investment portfolio because there'll be tax consequences, or could be. So this would be an opportunity to take that tax-free cash and use that to fund whatever it is that they're trying to fund, which of course a divorce could be one of them, which we're going to get to in a second. And then of course there's times when we'll just use the example of mom and dad. They've got some mobility issues. They have some health issues. They want to stay in their home, as we've just alluded to. Most people do. And they have to retrofit their home to accommodate those issues, bring healthcare in, rather than in a healthcare facility, they want to bring that into their home, and that costs money. So they can use the proceeds of the reverse mortgage to fund that situation or those situations. There can be multiple uses of these funds. And then there's the idea of debt optimization. So we're paying out secured debts, we have to, but there may be some unsecured debts that the client just wants. Can you pay that out? I don't want any more debt. I don't want those monthly payments anymore. Can you please pay all of those out? So there we are optimizing their debt situation. There's other things they can do with those funds. They can invest those funds with the help of a financial advisor. They can purchase more real estate investment income properties or anything like that. It's probably a good time to say, as you may be gathering already, is that we're not concerned what the funds are being used for. We talk to you and the client about the use of the funds, but really that is just to make sure that we are, helping them choose the right options in terms of the product itself. The other one that I really like to talk about is living inheritances. So a lot of, we talk about the bank of mom and dad, our kids or even grandchildren, perhaps the grandparents, the parents want to help their kids with either a down payment on a house. We know that's tough to do these days, or pay for post-secondary education. And they want to do these kind of things while they're still alive, rather than wait till they've passed away. We'll this can be an opportunity for those parents, grandparents, or even people who don't have children who want to, provide a charitable donation or something like that in lieu of, having children to pass their money on to. So again, we're not concerned about what the funds are being used for, but this is an option that can be discussed with parents who would like to provide a living inheritance. And then there's crisis situations, which you're all very familiar with, the gray divorces, as we call them, because remember, this product is for the 55 and better market. So for those who are 55 and older, they may be going through a divorce. You know better than I do about, the commonality of that these days. Perhaps COVID accentuated that, in a way. But there are gray divorces and other unplanned cash needs that can be supported by a reverse mortgage. So what I'm going to do is also just allude quickly to, because I've talked about where a reverse mortgage fits nicely, is where doesn't it fit? Because this may come up in your discussions. So there can be a time when, or a situation where the homeowners are high income earners, that this doesn't make sense for them, or they don't need the product per se. So that could be. The other one that's quite common, or can be quite common, is that wide spousal age differential. So let's suppose an individual female, 55-year-old female, is a homeowner, and her spouse or partner is 85 years old. So we would have to take into consideration or base the eligibility on the younger of the two individuals, so the 55-year-old female. And by the way, we base our calculations on longevity, which would translate to this for male and female. So females, we assume or base the calculation on a woman living to be 89 years old and a male 84. So you can see with that wide spousal age differential, this may not make sense in that case of a 55-year-old female and an 85-year-old male. Then there's a hobby farm situation, or a large rural property, large acreage. We have real limitations with being able to evaluate or appraise those. So they may not be entirely ineligible, but there are a lot of considerations that would be taken into consideration. But nonetheless, we would work with you if you have a situation where that is the case. Large retirement debt loads, because we are paying out those secured debts, and perhaps the client wants us to pay out some unsecured debts, there may not be very much left over in the end for the client to benefit from doing this. After costs and things like that, this just may not make sense. So we take that into consideration when we're evaluating the whole scenario. So let's talk about, this case is about supplementing income. So there are various situations where, as I mentioned earlier, the clients, CPP and OAS and things like that are just not, making ends meet. And of course, taking money out of a portfolio is a taxable event. So this is just very quickly a couple that, have a very high valued home. they have investments, and the house is appreciating at, let's say, 3% a year, and their expenses are pretty high. So when you look at the long-term nature of that situation, they're going to run out of money by the time they're about 84. So our income advantage product, as an example, could help supplement that income and help carry forward till they're into their 90s without tapping into their investment portfolio, as an example. The one I really wanted to talk about today, given our audience, is that gray divorce scenario. Now, given that this is referencing a BC situation and things are a little bit different there, nonetheless, the outcome and the scenario and the solution remain very similar. So in this case, a couple, male 71 and female 65, they have a detached home, and this again is in North Vancouver, value 1.7 million. They've got a portfolio they could tap into. They have registered and non-registered investments, but this couple have very amicably, and I know that's not always the case with your scenarios, but one of them wants to pay out the other and does need to pay out a payment to their spouse, but one of them wants to stay in the home and pay out the other one. So this is made possible with the reverse mortgage. And so in this case, Bob, Mary is going to pay out Bob, and other investments are going to be split 50-50, et cetera. But this reverse mortgage has enabled them to, to do this very amicably and quite easily, I'll be honest. And from a financial advisor's point of view, when they get involved in this, they love it too, because both of them are remaining clients. The house is still going to appreciate for the person that's remaining in the home. And there's just lots of other things that are very positive about this situation. So I believe that this could be a topic of your conversation, is this could be facilitated by just referring that client, those clients, or that client, I guess, to me. And we go and see what we can determine would be the viable solution for them, and meet that requirement that Susan wants to pay out Bob and remain in the home. So sometimes we get asked about fees and such, how is this different? What are your interest rates like, et cetera? So what I wanted to mention is that there are closing costs like there are with any mortgage. There are fees associated. We do require independent legal advice for the clients to obtain. So initially what we do if the client is interested in pursuing a reverse mortgage is we do set up an appraisal. So depending on where that is, where the property is, and also whether or not it's a desktop appraisal or whether it's a physical, face-to-face come out to the home appraisal, usually that appraisal fee is paid out of pocket. The closing costs can range from anywhere from $1,795 to $2,995, depending again on the version of the product that's chosen. The flagship product, CHIP Reverse Mortgage, as an example, has the cost of $1,795. And the independent legal advice, I know you all have lots of lawyers that you could refer the client to, but we also can do that in their respective area. So we do require that. We're protecting everybody, making sure the client understands what it is that the reverse mortgage is providing them with, helps them sign the legal documents, and goes through the costs and all of that, with them face to face. So we can recommend a lawyer in their region if they like, or 2 or 3, and that's part of our service. So these are very typical costs with any mortgage. And I did allude to talking about the interest rates that are associated. And I always say this as a general statement, that the reverse mortgage interest rate is probably about 200 or 2% higher, 200 basis points is what I was going to say, or 2% higher than a conventional mortgage. So when you look at bank 5-year fixed rates versus the CHIP reverse mortgage rate, there is about a 2% differential. So right now our fixed rate, 5-year fixed rate, is about $899. So when you think about that, though, the benefits associated with that, the solution that it's providing is really that extra rate is to protect us, the mortgage, the mortgage holder, but also there are no payments being made and there's no qualification that's required for the client. So those two alone are providing that extra, that really justifies that extra interest rate. So I can send you the interest rates. We can talk about them on a case-by-case basis, but that gives you a general idea of what the interest rates are currently. So what to expect? So let's suppose you said to me that you have a lead, whether it's tomorrow or in two months or whatever, in 2 weeks, is you would just call me. We have what we call a referral form that gets completed. It has all that information I talked to about at the beginning, which would be their age, gender, the title owners, where their property is, their postal code, their estimated value, and the type of property it is. Those would be the main criteria that will be asked. And you submit it to me. Like, you ask me for it, I give it to you, we fill it out together. Virtually is fine. And it gets submitted into Home Equity Bank. And we are assigned a dedicated mortgage specialist that will take the case from beginning to end. And we'll educate the client, call the client. We can do a 3-way call. It could just be myself and the client, and then the mortgage specialist, or all three. We do it based on what you recommend. Sometimes you don't even have to be part of the call. We can just I can just keep you up to date as to how the file is moving along. So we've got a few people that, depending on where you are in the province, but I think right now, for simplicity, that you would keep my information handy, which you will see on the screen shortly, and reach out to me, and I will be the one to help you move a file forward. So I think we'll open it up to questions, Marianne, if you'd like to do that, whether it's by chat or just unmuting. Absolutely. I'm not sure.
Mm-hmm. Yeah. I'll start with asking a couple of questions in the chat. So, and one is related to interest rates, which you were just talking about. Does the interest rate, you mentioned a 5-year term, does it move? So in maybe 10 years, if our interest rates give us some relief, do the rates go down?
Good question. Yeah. So sorry, I should have mentioned there are some options. So there's a variable rate choice. There's a 1, 3, and 5-year fixed rate. So as you can appreciate, our product does not have an amortization. There is no amortization. So 5 years would be the maximum that is committed to. Let's suppose a 5-year fixed is chosen. In 5 years, then the reverse mortgage gets renewed. And at that time, the client could say, you know what, I just want a 1 year. Or maybe they start off with a 1 year if they're expecting rates to go down, which some are, and we hope so. So right now it could be a 1 year fixed rate, and in a year, then it's reevaluated. So hopefully that answers the question, but there is no amortization because we don't know how long this reverse mortgage will be in place.
Right. Is there any chance that someone could not re-qualify after the 5-year term, for example, for the reverse mortgage?
No. Well, not income qualified. Maybe part of your question might be, what if there's appreciation in the home and there may be even more equity available for the client? That may be considered a refinance.
Okay.
However, I just want to mention too, though, that earlier I was mentioning that the client could be eligible for $500,000 today, and they just take out $100,000, and in a year, let's suppose when their mortgage is up for renewal, they still have $400,000 that they have already been approved for. So there is no reapproval or anything like that in terms of the equity in the home. But if they want to see if there's additional equity that they can access over and above the $500,000, that would be considered a refinance, and they would go through the same process again.
I see.
So hopefully that's
super helpful. And then I think the answer to this question is yes, but the interest starts the moment if you say you get approved for 500, you take out 100, the interest starts accruing at that point that you make a withdrawal from the CHIP reverse mortgage. Is that right?
On the 100,000. Yeah, that's correct. Only on what's taken. No, okay. That's correct. And it's cumulative. Yeah.
Okay. And then one question that Dolores asks about a step plan. If a person has a step plan with another bank, I'm not sure what that is. So I don't know if I'm sounding.
No, that is the name. Yeah, I'll explain that.
Would your institution be able to take over a step plan?
No, we'd have to pay it out. We would pay it out with the proceeds. That's the Scotia Total Equity Plan, I believe.
Oh,
Or maybe there's others, but no, we would be paying out that secured debt. We have to be in first position.
first position. Okay.
Mhm.
And then I see another question, but Patrick's got his hand up. So Patrick, you can unmute and ask.
Yeah, I just have a question with respect to, so like hypothetically, let's say the mortgage ends up underwater. Let's say that the equity runs out, maybe the property value has decreased instead of appreciating, or the client has
Thank
lived
you.
longer than anticipated. Is the mortgage the extent of the liability, or would you come after the other assets of the individual or their estate for the shortfall?
Thank you for bringing that up. And I'm sorry I did not mention that earlier. So Patrick, we have, and everybody, we have what's called a no negative equity guarantee built into our product. So there would, if there could be a situation where, let's say the client lives to be 110, or the value of the home does decrease during the time of the life of the reverse mortgage, Home Equity Bank would actually pay that differential. We would absorb the difference should that happen. And it has happened 1% of the time since we were launched in 37 years ago. But I really appreciate you asking that. And I think because of the conservative nature of our product, being that we will lend up to 55% of the equity in the home, that really helps us manage that risk, and also helps us keep to that no negative equity guarantee. So in answer to your question, I suppose it could happen, but Home Equity Bank would be the ones to absorb that differential. Does that help,
Yeah,
Patrick?
thanks. Yeah,
Thank
perfect.
you.
Right. That's why the rate is 2% higher, that risk.
There you go. That's part of it.
Yeah.
Yes.
Okay. And then another question in the chat. If CHIP is in first position, does this prevent second mortgages from being registered after CHIP?
Okay. So there can be some exceptions to that, or we can accommodate a second, a private, as an example. So that would be more of a exception case. I'm not going to say no, it is possible. It would just depend on the situation. So that can be discussed for sure.
Okay. And then another question in the chat, does a property have to be sold at arm's length at the end of the term, or can the CHIP be refinanced by another traditional mortgage and paid out at the end of the term?
Very good question. So I think I might even have to get back to you on that question, because it does have to be paid out. The individual, like perhaps it's their kids, their heirs, would also have to qualify for a reverse mortgage. I thought that was part of the question, but maybe it isn't. Would also have to be 55 or older. So another conventional mortgage to pay out the existing. I'm going to find out and get back to you on that if I could, Marianne.
Okay.
Thank you. Good question.
A very smart person asked that. Okay, so Chantel may have missed it. Can one put the funds back on the mortgage without penalty? Also repayment of the,
Yeah, there are some provisions. And again, that's something I can send you because there's a bit of a schedule depending on what term is chosen. There are prepayment penalties in certain situations. Up to 10% of the balance of the reverse mortgage can be paid back every anniversary of the mortgage when it's up for renewal and things like that. And then, so I'll send it to you because it is a declining schedule. So it's a lot of verbiage to tell you on the call. But there are also situations where we reduce the prepayment penalties or even full payments because of death, or perhaps because the individuals had to move into long-term care, or even one of them may have had to. So I'll send that information out because that's good to have at a glance. But yes, there are prepayment penalties.
Oh yeah, I didn't think about that angle. Okay. So yes, and for those of you who are at the webinar today, if you want information that Kate shares with me, please email me directly, just like the usual, our usual routine, and I'll send that out to you as soon as Kate sends it for me. Mary is asking a question. Sorry if this has been explained, but I think you said that interest is cumulative. So for example, if borrowing $100,000 at 8% in 5 years would look like she's doing math, $8,000. I think that's what she means.
Yes.
Yeah.
And you know what would be great to do is to go on our Illustrator or our calculator at chipadvisor.ca. And that will be displayed, like whatever criteria has been input, and then it will say what would be the interest costs after a year, after 2 years, 3 years. And that's calculated semi-annually, the interest cost. It will take into account the appreciation of the home as well. It will give the complete picture of what this reverse mortgage scenario would look like over whatever period of time that you choose. So I think that's probably the best way to, kind of illustrate that, how it all works. And if anybody needs help with that over the phone, we can do that very easily. But I think you'll find the calculator and the illustrator an amazing way to share with the client what could possibly work for them. And it can be customized as well with your information and their information on it. And it's a lovely PDF that can be sent out to the client, again, to illustrate what this could look like for them.
Nice. Okay. Yeah. And Mary's done great math here. So it's cute compound interest.
Compounded, sorry. Yes.
Yeah.
Yes. Thank you.
Okay, very good. Is there anyone else who'd like to unmute and ask a question of Kate? You're a wealth of resources here. I think it's I can for one say that when I first heard my first client, saying, oh, I'm going to do a chip reverse mortgage, I was like, I don't know what that is. Like, is this a good thing? I'm not sure. I mean, to be fully transparent, I'd heard sort of like, maybe that's a business.
Right.
So I quickly called one of my financial advisor friends, and they said, absolutely not. This is a fantastic option in certain circumstances. And they completed it, and it really did help them achieve the goal of staying in the house, and no deferment of the sale, no deferment of equalization payment, no having to put a lien on the house for the deferred equalization payment, and it was clean and they were done. And it looked like a good solution for two people that I work with. How to use this on the net family property statement, Marianne. So really this is a loan after date of separation. So this is a payment vehicle. It's not affecting the net family property statement, in my opinion. Patrick, you're shaking your head, and you're a lawyer, so you can back me up. He gives me the thumbs up. Okay. Yeah, it does not affect the property, because you're only looking at date of marriage snapshot and date of separation. This happens after the date of separation. If it happened before the date of separation, let's imagine you do the reverse home mortgage and then it doesn't work out. This is in both names, right, Kate? It's a debt in both names, like any other traditional mortgage.
Yes, it is. Yes.
Okay. So that's interesting.
Actually, wouldn't that depend on who actually owned the house?
Well, yes, it would.
Yeah.
Yes. Yes. True.
Interesting.
Yeah. Title owners.
Title owner, and there could be all sorts of payment penalties for breaking that mortgage if they had to sell the house. Ooh, very interesting. Okay. Do you do a security of marriage test evaluation in this part of this process? I'm just
Are you asking me that?
I'm kind of kidding, because I wonder if like someone thought, oh, this is a great idea for us. It's a really good solution. We're going to live together till we're elderly, and they have to be pretty sure that that's what's going to happen, if because you don't want to run into trouble.
Okay. I see what you mean.
Yeah. I'm just kind of joking.
Okay.
Yeah. I mean, no one knows what the future holds. And so many of our clients come to us with, when did you renew your mortgage? Oh, 2 months ago, even though they've been having trouble for 2 years. So it has to be, it's anticipated that sometimes this would happen. Okay. If a mortgage is jointly owned, one spouse passes away, what about the existing chip mortgage that was obtained in both title owners?
Great question. Yes. So we actually allow the remaining spouse to continue with the mortgage. So if one party passes away or does move into a retirement facility or long-term care, as an example, it does not stop there. The remaining spouse can carry on with the existing reverse mortgage.
Okay. So it transfers.
Yeah, absolutely.
Okay, so like a tenant in common situation, or joint tenant situation.
Joint tenants, yeah.
Joint tenant, yeah. Okay, are there any other questions that anyone on the call has? I think I've done. If I haven't done your meeting chat, please feel free to raise your hand so I can address it. I think
I might just offer an answer to a question that hasn't been asked yet. You may be curious how long this process may take, or how long does Home Equity Bank take to process a reverse mortgage? Again, it depends on the complexity, of course, but on average, it takes about 25 days right now. You can appreciate that if there are debts to be paid out, we're ordering payout statements. We're actually using a company called First Canadian Title, title insurance company that does all of that work for us. So paying out debts, possible in some cases where there's title changes that need to be made and things like that. I don't mean with respect to divorce necessarily, but an individual may have not taken their deceased husband off title or things like that. That is also done at the same time through the process. So paying out other debts, getting the appraisal done. If it's a desktop appraisal, that's quicker than obviously a full appraisal and things like that. So we obviously keep you up to date as to the stages that we're at. I recently just helped somebody fund a divorce, a reverse mortgage resulting from a divorce. And they told us, what date this had to be completed by. And of course, we were able to say, okay, that's very reasonable. It was a month. And it didn't take that long, but it's good to know those things ahead of time. If there are any deadlines, that would be good to know before we, start the process and commit to something. But on average, it's about 25 days from the very beginning to funding.
And I'm assuming from what you've said, unlike a traditional mortgage where you're refinancing, that you're actually not looking for a signed separation agreement and putting people into that chicken and egg scenario.
Actually, I think we do need a signed separation agreement. Yeah, we do.
Oh, darn.
Mm-hmm.
Really?
Yes.
And why is that? What if is that because they're the very nature of because they're separating?
Yes.
It has to be one person because two people are on title at the time.
Yes.
Yes, I see. Okay. That's always a struggle, isn't it? Like that signed separation agreement piece, when couples are negotiating and trying to figure things out. Do you give a sense of pre-approval or like likelihood of kind of being in the ballpark?
Yes, and that would be based on our illustrator. But we're also, the one variable in that is the value of the home. So some people give us a value and the appraisal comes back and it's either less than or pleasantly more than. But sometimes the value that we're placing on it, just them and let's say me doing the illustration, isn't quite accurate. So that would be somewhat of a pre-approval. And then we talk about, do you have a mortgage already? What sort of other debts would you expect to want to pay out or whatever? And then the remainder is then going to be yours, that kind of thing. So that would be like a pre-approval, I suppose. But the appraisal certainly is the one thing that we have to be sure of.
Okay, the appraisal of the home.
Yeah.
And then our friend Dan is talking a little humor here about the negative potential reaction from adult children who impact on the inheritance. Do you find that happens often?
Yes.
You struggle? Okay, yeah.
We laugh or joke about that too. Are the children on board? That kind of thing, and that's what's good about having the illustrator talking about the home equity appreciating during the life of this reverse mortgage, because that's for the kids who say, this is going to be my home one day, mom and dad. So I don't know if I like you taking equity out of it right now or what have you. It illustrates that what remaining home equity there will be, in 10, 15 years or what have you.
Right.
Again, a little tongue in cheek, but sometimes, and I haven't had to do this yet, but the question can be asked to the children, are you going to help mom and dad stay in their home by offering them some financial assistance? And then, oh no, or something like, you know what I mean? Like we do it very, carefully. Our mortgage specialists are very good at that, but that's what we could point out, right? Is the equity in the home still appreciating, and, mom and dad, really want to stay in their home, that kind of thing. So, but
Excellent.
that does come up. And the ILA really helps with that too, that independent legal advice piece.
Very nice. Well, if you ever need an intergenerational mediator, one has their hand up right now, and there's a lot that are on the call. Patrick?
I was just going to say, just quickly with the younger generation and the older generations, the topic of these reverse mortgages comes up quite often with me in the sense that the older parents often want to put the house into joint tenancy with their children to avoid probate, right? And one of the things I point out to them is if you do that, you will not be eligible for a product like this because you won't meet the age requirements, right?
Right.
So most of the time, control is the main issue, but it is one factor I generally do hit with people to say there are products like this available that would no longer be available to you. And it might be the difference between staying in your home or not.
Yes.
So,
Thank you. Very good point.
Yeah, it's very
Excellent.
interesting. Yeah. Yeah. Any other questions from our, we have a lot of people here. This is a popular topic. I think that, you know, you've really helped to shine a light on what is something that, you know, really I think was unknown to me about a year ago. And so this is fantastic.
Thank you.
Yeah.
And if I could get everybody a copy of this book, The Home Run, I'd be happy to get them to you, Marianne, or some way,
Okay.
distribute them. So we can talk about that offline, but it's a wonderful book full of stories,
Okay.
actual cases that have come into our consumer line as a result of the TV ads, and the
Oh,
changes that this product has offered individuals is very heartwarming. And there's a lot of those stories in the book. It's easy to read. It's great to pass on to the end client.
nice.
So we'll figure that out. I've got quite a few of those. So
Is it hard copy, Kate?
no, it's soft.
Oh, soft. Okay, good. Yeah, I mean,
Hmm.
if you're on the webinar, email me if you're interested in receiving any of the materials, including the. Okay, good. I'm glad. I was imagining myself with bubble wrap and mailers, and
No, no,
very
and I can
happy.
drop them by somewhere.
Yeah, yeah. Lots of thank yous to you in the chat. If there's no other questions, I think we could end a little bit early. That's totally fine. That's not give you a few minutes back to you in your day. As always, it's just wonderful to have OAFM members show up and you know, take advantage of learning about these things. Please email me because the meeting chat will disappear. So everyone knows my email, I think. If you don't, it's director@oafm.on.ca. I'll pop it in the chat, but I'll lose the chat. So I will just put my email here, and then you can just email me because I will not be able to see who's here. I can multitask, but not that well.
Mhm.
All right. Okay, good. I'll give you the last word, Kate.
Thank you very much. Well, I
Yeah.
just really appreciate this introduction, and it's the beginning of many that can happen going forward. And I really invite you to keep my email handy and just send me emails, call me. You have a potential scenario. Can you help me get on your website and do this calculator, go through the calculator? That's what I'm here for, is to direct you and to, help illustrate how great this product can be for certain clients. And I look forward to it all. So thank you very much. And I want to thank my friend Andrea again for making this introduction. And I look forward to continuing more conversations with each one of you. And
Nice.
again, Marianne, thank you.
Oh, you're so welcome. Andrea is here, so that's so nice. Glad that your colleague came to support you. So thanks, everybody. Enjoy the rest of your day. Take care.
Thanks, everyone.
Okay,
Bye for
bye.
now.
Bye.
Bye. Bye.